You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, via the ever-exciting Options Insider Radio Network. Just doing some live tweeting here as we go live here. And, of course, you can always listen to all of our fun episodes of Vol Views or whatever program floats your boat here on our network. We've got 15 of them now. Easiest place to do that, the mothership, the flagship, theoptionsinsider.com. Don't have the live baked in there yet, but we're working on doing that on a future incarnation of the site, so you could show up there and check out the live streaming schedule and maybe click on it and get access to it right away. In the meantime, of course, if you do want to listen live, if you can join us every Friday, noon Central, 1 p.m. Eastern, for good old Vol Views, we'd love to see you. You can do that via Mixlr, Mixlr is the platform we use for that. And, of course, you can ask questions, stream along live, and all the other fun stuff. See how the sausage is made here on the Vol Views program. Of course, if you want to come after the fact, we love you guys, too. Most of you guys listen on demand. That comes out every Monday morning on iTunes or Stitcher or wherever you get your favorite podcast programs. Google Play Store now up there as well, or via whatever service you like to use. And, of course, we welcome you all as you're listening, as you're streaming, as you're downloading. Send in your questions. Send in your comments. We love to hear from you guys. And joining me on the program today, starting off in his corner office, I believe, even though his the Skype, I guess they're so busy getting their earnings out today, they couldn't pay the Skype bill. Mr. Russell Rhodes, the senior instructor over there at the Options Institute. Russell, welcome back to the program, sir.
I think they fully blocked it. It's gotten worse from week to week. Unfortunately, I got to teach a class, or I would have headed over to the palatial, soundproof studios that are the Option Insider Network.
Yes, that's why Russell sounds a little muffled. He is joining us via the magic technology known as telephone. So going back to the last century for that one, but we'll get it worked out. We'll find some way to tunnel into the CBOE to get Russell in, or of course we'll get him into the magical studios here where we have delicious frosty beverages and fine outerwear and all sorts of other fun things for our guests. And also joining us, actually, Mr. Rock Lobster got to sample that for himself last week. because he was in the studios live. Now he's back in the hinterlands of Maine, pinch hitting for the Greasy Meatball, who was off somewhere, I believe, in fabulous Michigan for a vacation. Mr. Rock Lobster, welcome back to the program, sir. We missed not having you in studio.
You know what? I enjoyed the studio. It was quite. I'll tell you what. It was a soundproof. I feel like I was in some sort of womb. It was like the Options Insider Radio womb.
That's the first time I've heard it called the womb. It's impressive.
You've got to go through a whole maze to get there. It's like a Hotel California type situation. You might not be able to leave unless they show you how to leave that place.
Guests get in, they cannot get out. We have had a few guests who I shall not name wander the halls for a bit after they leave, trying to find their way out. And yes, we've done our darndest to nestle ourselves deep here inside an old turn of the last century building here in Chicago to really isolate all of that background ambient noise out, so you just get the pure timbre of my voice and that of the guest. And then, of course, we dial in Russell by cell phone, so the whole thing is falls apart. As we move on into our first segment, it's time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Volatility Review. This is, of course, the portion of the show where we break down the week that was and indeed still is from a volatility trading and analysis and trends and developments and breaking news perspective. We are recording this, of course, and streaming it live, like I said, Friday, July 29th, right around noon Central, 1 p.m. Eastern. For all of you playing along after the fact, and here we are right smack dab in the middle of the session today, and most of the major markets kind of yawning, kind of taking it easy today. Not really a heck of a lot lighting it up on the old street, which is surprising given the fact that we have seen a bevy, shall we say, of pretty strong earnings, and not just strong, but just pretty big earnings this week. And yet the market kind of shrugging it all off for the most part. Have had a little bit of a range out there in the S&P today, even though we're pretty much vaguely unched at this point. We did get as low as about 2163, so it's been about a 14 handle range on the day so far. So it is moving a little bit, but nowhere near what we've seen in recent weeks, recent months. And of course, as we like to do here on this program, we set a laser eye, if we will, on the old VIX Cash, because we like to pick that sort of thing. Right around a 12:37 or so as we're entering the show. So interesting. In fact, it's funny, as we were prepping the show today, we were looking here, and I think maybe one of the stories of the week is kind of how after yet another week, a week of big earnings, a week of the Fed and everything else, we're kind of right back to where we were last week. I mean, most of the numbers, I don't care where you're looking. If you're looking VIX Cash, if you're looking VVIX and maybe OVX or others, it's almost like we could have just taken last week's show prep and just copied and pasted it in for this week. Just changed some of the earnings that were coming out this week, because there isn't a heck of a lot of difference between this week and last week. I don't know, maybe Russell, some nuances are leaping out to you, but on a broad 10,000 foot perspective, we're not a heck of a lot different than where we were this time last week.
Well, the one thing that's really different between this week and last week is the front month futures. You know, we were in a ridiculously steep contango a week ago, and like you said, the index hasn't done a whole lot, but both the August and September futures have been creeping lower, and that I think VXX may be down as much as 10% this week before all is said and done, and SVXY is up around 8 or 9%. So everything, I guess, when everything stays still, the futures and then the ETPs, or at least the long ETPs, are going to hurt you, and it's going to help the short guys.
Yeah, we had an interesting question about VXX back at the option pit spectacular last week, the grand extravaganza. I think one of your students there, Andrew, wanted to know what the reverse split meant for VXX. And we just pretty much said it's like a recharge. It's like they just reset it so the decay can happen again. Of course, we're seeing a wee bit of that kicking in a little bit more aggressively today, and interesting stuff is getting some live feedback here. I'll digest that as Mr. Rock Lobster gives us his viewpoint on the week that was, and indeed still is, sir, from a volatility perspective.
My student, by the way, is still arguing with me about that on what happens on the split.
Oh, really? He doesn't
believe
recharge?
that the option gamma is going to decline.
I kind of wonder.
I can't. He's like, but the money's this. I go, but that's not what the question is. It's the gamma of the option is going to decline, and I just can't. I sent him the sheet. He's a tough one to win over, but anyway.
I think a good analysis also would be for VXX is how long ago would it have essentially erased itself from existence if it didn't keep doing these reversibles? How long ago would VXX have just vanished if not for this, or been effectively untradeable?
I agree. Well, it's hard to trade anything when it's 3 cents.
Yeah, or fraction of a cent.
To 2 cents, it's a 30. What is that?
That'd be huge moves every day. The gamma would be just incalculable. So much.
What do I have, Russell?
I was going to say it'd be trading at sub pennies, I think.
It'd be fractions.
I mean, it would be trading. It would. I mean, it wouldn't even have a 1 cent handle. I don't think.
It would be sub fractions of cents.
Experiment.
That's why I think it'd be interesting. It'd be interesting to run that analysis and to see how quickly we would have broken the penny. Probably quite a long time ago.
Broken the penny.
Oh my God.
Well, that's part of our educational suite. It's what separates how you trade VIX from how you trade the vol products, how you use them. And it's like I said, the VXX is predictably crappy, except when it's not. And we were just funny. UVXY, we had the split. It was $30. I think when we were having this discussion on Thursday, last week, and it was $30 on the split, and now it's $25.68. So that's UVXY. That's the double product. So, contango. These products don't like contango because all the stuff they own decays. It's just the way it works. And then when the market for volatility switches, they all of a sudden become hot. So we had some contango plays on in our strategy letter and stuff. We closed them yesterday. We're going to close the rest of them today. I closed a bunch of XIV yesterday. You have the products behave a certain way, and normally, what we try to do anyway is it's how you sort of hedge the mess. I have clients that use different language than mess. But, the contango is fairly predictable, but, when you put them on, how you put them on, how you account for potential decay of the product, that's all that stuff is. You can learn to do all that stuff, and it makes sense. How do you hedge them? You could use SPY puts. There's all kinds of ways to do things, especially when the VIX is trading at 1227 as it ticks to that point right now. So the term structure, I think we have a short, I'm not going to say short, but we have a normal August settlement around the 17th. We have 2.5 full weeks, and we have $1.50 or so in it right now, which is still, it's probably about 50 cents too much, I guess, than we'll call normal. Basically what's happening is VIX Cash is going down because the index keeps grinding higher. Realized vol in the S&P 500 is below 5. And you have future traders that will let the futures decay, but nobody's coming in there to pound them out. And I think that's what we've got. The September, I'm just looking at some stuff now, is $4 over. So they are building. The 16 handle has been the sticky handle, especially on the second month future. Just doesn't like going below that, and I can't believe them. So, and I can't blame future traders for doing that. And there's no willing sellers. So it's just one of those things until nobody believes this rally, and they probably won't believe it until, the Dow is at 19,000 and the SPX is at some crazy number. Like, oh my God, there's a rally. So I can't believe we're going higher, but I don't fight it either. And that's one of the easiest ways to do that is come up with contango plays in the volatility products. Just be mindful of how you do it and how you might hedge that particular position.
I'm sorry, I couldn't pay attention to you. I was horribly distracted by Russell's new Twitter profile picture of some baby yanking on his head. It has distracted me to no end. But yes, it is funny, just that near portion, that near term of the VIX futures is probably one of the only areas really where there's any meaningful kind of difference from last week. And you kind of expect that in the futures. They kind of had to come a little bit more in line eventually. And this week is the time. Aside from that, everything else is pretty much, almost, verbatim from last week. We were hovering around a high 80s, I believe, last week in the VVIX. Right now, we just passed over the 90 handle, but still, a couple ticks away from where we were last week. We're still elevated, but nowhere near, of course, the extremes we hit back. Not even really a month ago. Actually, about almost exactly a month ago, we were printing like around 132, 133 out there in VVIX land, and things were really just rocking and rolling. So we're clearly not near that elevated end of the spectrum. If you compare it to, that 133 to 75 range, we're obviously closer to the bottom, but still we're not hovering at that, mid 70 range, which would kind of indicate a relative level of normalcy, complacency, call it what you will, out there in the marketplace right now. So we're still kind of waiting and seeing a little bit. You're right, Mr. Rocklaus. Doesn't seem like all the numbers we're seeing are still showing anyone piling off this extended rally yet. Even some of the earnings we saw this week, and we'll get to that a little bit later, kind of telling a little bit of a mixed story this week. We're still waiting for Russell's big straddle study to come out. In the meantime, while he's putting the finishing touches on that, Russell, why don't you break down some weekly options activity for us in everyone's favorite segment, including mine, because I get to take a few minutes off. It's Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
Have at it, sir. The floor is yours.
There's the music. Believe it or not, in the weekly space, the low-handled puts are getting a lot of love. We've seen buyers of the August 10th, 12.5 puts today. Somebody bought over 5,600 of those. It looks like they paid, almost maybe even up to 40 cents for those. Somebody came in yesterday and sold an October option. They sold the October 25 call, and they sold 5,650 of those. And they basically have been taking that premium and spreading it out amongst a bunch of other expirations. They skipped September, but they did August 10th, and then they did a bunch of the standard ones. It looks like they did the August 24th 12.5 puts today as well, because it looks like about the same size. So somebody thinks that they're okay betting that VIX will not be above 25 anytime between now and the end of the year, and using the funds to buy some of the low strike puts. They bought yesterday. They were buying the 13 strike puts. Today they're buying the 12.5 strike puts. But like yesterday, they bought the August 31st, which it's the last day of a month, but that is a VIX weekly option. They bought the August 31st 13 strike puts. So somebody is strategically using the I don't want to call them short dated because August 31st is beyond the next standard expiration, but somebody's using those options just to try and play a bunch of low settlements. That August 31st one in particular I like that one because, it'll be after all the August economic numbers have come out, and it's just before Labor Day, and we'll be kind of on hold waiting for the next Fed meeting, and nothing bad could happen to the markets in late August, right? Somebody has to
traditionally tranquil time. Nothing really happens. No crazy outliers
but
of the market.
Look at August 24th of last year.
I knew he was going to do that.
That's where I'm going with that. So we'll see. I'm really curious about that August 31st option. Just because, very short memory there, I guess. Although it's difficult to fight with that one, So that's really what it was. One guy that sold, has been selling some options. And Andrew, that's not Mark doing that, is he?
I don't think so.
That seems like something he would do. but I don't think his wife will let him trade this week.
We actually closed stuff this week.
Okay,
we closed
good.
stuff yesterday. So, and you're right. Your wife didn't let him trade. She yelled at him while he was on the phone trying to get stuff done. It was
Mark.
It was not
put
a
down
very
the
good
phone. No.
scene.
Mark, stop drinking beer.
She sounds much nicer than that.
No, that's his kid imitating his wife. You not seen that video?
Oh yeah, I did.
Before we get too deep into the disturbing dynamics of the Sebastian family household, we'll keep on rolling right on into the mothership of VIX Options, VIX products out there. A lot of interesting stuff lighting it up out there, even though it wasn't really, let's say, the heaviest of volume weeks out there for the big product, still averaging around that same 600,000 or so level. Yeah, it's actually exactly almost 600,000 ADV right now out there in VIX land. It's been that way for the last few months. Only day this week really breaking that was Monday, about 625,000. The rest of them all pretty much on the south of the ADV. 415 on Tuesday, 534 on Wednesday, about 475 on Thursday, and today so far we're at about 285 or so out there. So it doesn't look like we're gonna set any new volume records today either. Pretty light day, as Andrew was alluding to. We are coming into the August time frame, not a historically high volume time of the year. That one day, I don't know what you're referring to, August 24th, Russell, except maybe a couple days after my birthday. So the celebration is still lingering in the marketplace. Maybe that's what you're referring to. I'm not sure whatever else could have happened possibly on that day. But those outliers aside, not a traditionally rocking and rolling, from a volume perspective. The markets may move a little bit, but most of the big players in SPX and VIX are often in the southern Mediterranean, enjoying themselves in the Riviera. We know there's a big European and French contingent who trades a lot of that, takes that entire month off. So not a lot of the big players out there active. So we may be seeing some light numbers for some time here out there in the mothership. Doesn't mean there haven't been some interesting big prints going up, some funky ones today. The option leading the charge today, as Russell was alluding to, was a lot of puts lighting it up again this week. In fact, today already about... looks like about nearly 50,000 of the AUG 14 puts have gone up on some funky ratio spreads. Actually, looks like they were the first lot was about nearly 25,000, 24,800 to be precise. Of those AUG 14 puts going up against 4,300 of the SEP 14 puts. So a little bit of a funky maybe roll. Maybe our friend taking off some size in AUG. After I don't know, those AUG 14 puts should have done all right for him. But usually when you see a roll for a lot less size, then chances are the trade usually didn't work out. But he did it again a little bit later, doing about 25,000, almost 24,800 again of those AUG 14 puts, followed up this time by a few more of the SEP to the tune of 11,000. So he did a total, looks like, of just about 15,000 or so of those SEP 14 puts, so a bit of a funky ratio. We'll keep an eye on throughout the day if maybe more size goes up there, if he's going to increase his holdings out there in SEP. But that's a bit of a funky one. Yesterday on Thursday, it was more calls leading the charge out there. In particular, the AUG 2230 time vertical, I guess you can call it. It was because AUG 22 SEP 30. Time vertical paper was buying that, which is kind of interesting. Perhaps taking something off. There is a lot of size, obviously, open in the AUG already, about 140,000 contracts. A decent size on the SEP as well. That SEP, we've said before, that 30 strike just seems to capture the imagination of a lot of the players out there in VIX land. We always see size open interest right around that very, very clear round number out there. Also saw, AUG 15 puts lighting it up on Thursday to the tune of 10,000 of those going up for about $1.50. The SEP 14 puts, again, that strike perhaps becoming the new put strike du jour, going back to the July 16s of yore that were also very popular. About another 7,500 or so of those going up for about 58 cents on Thursday. Wednesday, it was kind of all AUG calls all the time. In particular, the AUG 21s lighting it up. Paper just straight up buying those for, looks like about 58,000, actually 59,000 just about of these AUG 21s gobbling up for about a couple of different size blocks for about 44 cents. So upside calls were the order of the day there. Again, open interest sizable there. So there could be some buybacks going on there of some shorts. But if they shorted those, they didn't have much time to really get those off unless it was immediately post-Brexit. And then they've been waiting until now. Interesting timing to buy those back. So probably some new open interest piling in there, as well as Tuesday, another one of these funky short straddle with the kicker, with the hedge, call it what you will. We've seen a few of these going up before. This one hedged a little bit differently than we've seen in the past. This one was the SEP 16 going up about 7,815 times. Paper selling out, blasting out both the puts and the calls. Doing it for right around $4 or so. And then usually when you see someone doing something like that, I don't care if it's an iron fly or if a condor or whatever it is, something where you're selling kind of something meaty, guts type straddle type or strangle type position. Usually if they're going to hedge any leg out there in VIX land, they're going to buy the upside. They're going to buy the call to protect themselves against some crazy aberrant move to the upside. Not the case here, where the hedge slash kicker, call it what you will out here, was actually the SEP 14 puts. So they actually did it with the puts instead, buying those about 7,815 times as well. So you can look at this a couple different ways. Short put spread with a short call kicker, call a short straddle with a put downside hedge, call it what you will, but a little bit of some funky paper lighting it up there on Tuesday and rounding out the week there on Monday. Kind of the size trade of the day. Looks like it was a bit of upside short vertical. SEP 21.25 going up. Paper selling that about 17,500 by 20,000 times. Also saw 20,000 of the AUG 18 calls going up at the same time against that. So they could be rolling out of August into perhaps that short SEP vertical, or it could be another leg of that vertical as well. It could be just a funky three-way. A lot of funky paper, even if the size this week overall wasn't earth-shattering out there. Moving on to what's kind of dominating the charts for this week overall from a VIX perspective, the hot strikes that are leading the charge. Number one is not the aforementioned 30 strike, even though that'd be kind of weird if the 30 strike was leading the charge right now, just because if people are piling into the 30 strike right now, we have to talk to them about a lot of other things. The 30s are on there, but they're far, far down at number 3. Spoiler. Number 1 this week are the AUG 18s with about 210,000 open. You can see open interest numbers still not what they were a few months ago. Of course, July came off the board. That's where a lot of the big numbers were. We're still looking to rebuild a lot of that out here. In August 21 calls also at number 2 with about 201,000 open there. Number 3, the aforementioned ever optimistic AUG 30s, 166,000 still open on that strike. There's a lot of spreads that have legs on the 30 strike, and so it seems to just add up to a lot of open interest on that strike. For whatever reason, a lot of people have interest on that 30 strike. Number 4, the AUG 22 strike, all AUG pretty much all the time till the bottom of the list here today. Number 5, the AUG 20s, a little more reasonable, 159,000 open there. Number 6 got all the way down there to get the first put on the list. The AUG 14 puts, aforementioned, 158,000 of those, about 150,000 for number 7 of the SEP 14 puts. Again, talking about those earlier as well, so those lighten it up as well. Number 8, the SEP 30 calls. Again, that magical, mystical 30 strike, 148,000 open there. Number 9, the AUG 24 calls, about 140,000 open of those. And number 10, the final put on our list here, the SEP 17 puts. So nice little strip of SEP puts there, as well as an AUG put making the top 10 this week. SEP 17 puts with about 132,000. Again, open interest numbers still fairly light, only about a little over 6 million open, about 4.2 or so on the calls, and about 1.9 or so around that level on the puts. Since we're talking all things vol and the business of vol, Russell, it's a good time to be in the business of vol. You guys over there at the CBOE obviously just reporting your numbers a few hours ago. Earnings coming out before the bell, and surprise, surprise, looking pretty good to be in the vol business this past quarter, particularly with Brexit giving a nice kick in the pants to all things volatility. They said our revenue over there, 13.6% rise in quarterly profit, and about nearly 10% rise in operating revenue. And again, transaction fees, about 16% increase, with about 2/3 of that coming in the indexes, aka SPX and VIX. Obviously a few others in there, but those being the lion's share of that. So Surprise, surprise, Russell. A good time to be in the vol business, sir.
No, absolutely. Brexit and whatever the next Brexit is and all those kinds of things. You know, you hate to be the guy that gets all excited when the market's selling off, but you know that's when people look to VIX to give them an indication of how much the fear is, and also they look to SPX or RUT to possibly protect their portfolios. So you know, it's a good time volume-wise when we get things like that. We like it even better when the market rebounds and everybody's happy after the fact, like the quick rebound that we got from Brexit. I do think that extending the trading hours helped an awful lot, especially since the last volatility event was in Europe, and adding expirations. I know we're supposed to be talking all things VIX, but you know we've got Wednesday options that on average Wednesday SPX options that traded, I think 115,000 on average a day last month. And next month we're adding Monday weeklies. Dun, dun, dun.
Yeah, you guys single-handedly bringing the daily expiration to the marketplace over there at the CBOE.
Yes.
It's coming Tuesday, then Thursday, and then pretty soon it's all done. Every time I see those announcements, I just say, thank God I'm not a broker. I don't have to deal with daily expiration coming down very soon.
You mean the IT guy? Those are the ones that got to make the adjustment.
All of the above. Crazy stuff. Speaking of crazy stuff, we have seen a bit of an interesting week here from an earnings perspective. I know, Russell, you like to look at a lot of single names, particularly during the big earnings season. And we have seen a lot of names not really knocking it out of the park, at least from a vol/straddle perspective. Of course, we saw earlier in the week some surprises. We saw Apple reporting and surprising to the upside. I think they've mastered kind of this stealth, talking things down a little bit. And oh, surprise, surprise, things not as dire as you thought. They're back over the century mark. Ford having a bit of a weaker announcement. They were off nearly 10% post their announcement, saying the rest of the year not going to be perhaps as strong. Some of the other big names in tech this week, Amazon lighting it up. They went out right around $7.50 last night going into their earnings. They were pricing in about a $50 straddle, so it was a pretty hefty move they were pricing in, about 6.5%. And they moved a bit in the after. I think they got up about 25 handles or so was the peak of the upside move. Here we are today, middle of the session, and most of that move has pretty much eroded, only up about 9 handles right now, so about 1.2%. So if you were buying vol out there in Amazon land, you're wearing it today pretty bad. Again, that's going to, I'm sure, renew calls for after-hours trading and options. We won't get into that right now. Our friends over there at Trade Alert, they were talking to the Journal. They were saying some of the more active options out there in Amazon were the 700 put going out this week. So a lot of people apparently loading up, not just on vol, but on downside in Amazon, which is proven not to be that good of a bet. They another one who are pretty good at sandbagging and then outperforming. And that 700 put not looking too good right now here. Amazon and Google now with those and Facebook, I believe, now the top 5 of market cap, completely dominated by tech names. I believe it's Apple, then Google, and then Amazon's in there, and Facebook, and one other that I'm blanking on at the moment. But yeah, having exceeded Berkshire and ExxonMobil, who took a hit this week as well. So those not performing very well. Speaking of the aforementioned, you can talk Google, you can talk Google, whichever you prefer. Alphabet, we'll look in the Alphabet range, and they're up about 33 handles. Again, they were pricing in about a little bit more than that, but still an aggressive move for Google. Alphabet hovering just a tick under the 800 level right now, up about 4.5%. They were pricing in about 5%, so that one a wee bit closer. That one also, again, according to our friends over there in Trade Alert land, pretty much most of their action this week was top 10 most active, all there in the calls. So people predicting that one correctly as well. That said, Mr. Russell, I know you look a lot at single name earnings. Any names catching your eye this week from a vol perspective?
Nobody really did anything outrageous this time. For full disclosure, I had 2 earnings trades on, and I was 0 for 2. So I don't really know if I'm the best source on all of this right now, and I'm a little bitter about it. But there really wasn't. We didn't get the outlier move that we normally get. the ones that we really want to talk about. So I wish I could make something up for you. I'm still trying to figure out if they had never split VXX, where it would be trading. I'm going to have that number in just a couple minutes.
You're running the numbers as we speak.
Trying to.
This product would have ceased to exist in December of 2012. Mr.
So what I want to know is, okay, what kind of crazy calculator is in Russell's head that he's going to calculate where VXX actually should be without a split?
Well, it took me forever to find the price back in January of 2009, but I got it. Now I got it. So now I can tell you where we're at in just a couple minutes.
Okay, that's funny. Now the question is it going to be at less than a penny or more than a penny?
I think it'll be sub penny pretty quickly.
I think sub penny.
I might make both of you guys guess.
On the date?
No, the price.
Or the price of where it would be right now.
On what the price for VX, I know I'm totally hijacking what we're supposed to be talking about, but on where, if there had never been a reverse split, where would VXX be trading right now? And I will be back with that number as soon as Andrew talks about Microsoft.
Yeah, Andrew.
Right, okay.
Some horrible fraction of you'll have to get into almost quantum mechanics to define the fraction of a cent.
Really, Longo, it'd be okay. Somebody's got to take over a penny, and somebody has to take below a penny. It's your show. I'll give you the first.
Oh, I'm clearly below a penny. Since I brought up this topic, I certainly lean well below a penny. I'll give you above.
Then I'm gonna go above a penny, but it pains me to do so.
You can balm yourself, soothe your pain by talking about your favorite name out there, Softy, and their earnings performance or perhaps lack thereof.
Oh no, the earnings were good. They outperformed their straddle. The old line tech has been outperforming their straddles. You know, the reason is nobody cares about them. It's not, Microsoft is not a stock twit's favorite stock. Cisco isn't, but you're looking for sort of kind of tried and true and, companies that still spit off a lot of money. So the only thing I would say with those is, even though what's more important is the relative move that counts. And, some of these companies are still producing those moves. The biggest surprise, and the Amazon just, where does that stock go now at the market cap it is? It's $400 billion or whatever it is with, little tiny profits. I mean, I know they do huge revenues, but I mean, how can they keep growing on earnings at this point? I would just think the more money they actually make, probably the less better the company does, because, how do you put a multiple on a company once it actually starts making earnings? Usually, historically the multiples have gone down, but, but they're generating, okay, so they generate $10 a year. Even if they generate $10 a year in earnings, that's still what? At 100 times. So it's still trading at 70, 80 times that number. So I guess it's starting to get a little more, relatively a little better, but I mean, ultimately it's how much money they can make. And I guess if their earnings power starts to really improve, I don't know. I don't understand. I think it's a great company. I think the ordering stuff is great. I just don't get why the market continues to value it the way it does. But whatever. It's not my question to ask.
That's why I brought up Amazon. I know that one deeply offends you as the diehard fundamentalist that you are. And you're kind of right. The more concrete money they make, rather than investing into some nebulous investment for the future or infrastructure or things like that, it seems to hurt them. You're right. And there's been a lot of debate. I mean, this is not new ground we're breaking here. This was, the hot topic on the floor in the late 90s. When's Amazon going to run out of cash, and when they're burning through money at a ridiculous pace and they make no money, et cetera, et cetera. This argument has been going on for well over a decade. It's just funny that it still persists, even though they're in the top 5 of market cap over there on the list. I know. Oh, Mr. Russell, he is ready. He has the number.
All right.
Lay it on us, sir. We have the over/under at a penny. I have south of a penny, giving my host privilege. I think the Rock Lobster picked $200.
I'm actually shocked at the number.
Oh, that makes it sound like I might have lost.
Yeah, you did lose. So the first day out of the box, it closed at 104.58. It's down 99.84%, and that would put it at 16.4 cents right now.
Curse you!
Which I'm not.
Curse you, VXX.
Think about it. If you got something at 20 cents and it loses 50% in a year, it's just a dime. So.
Still, how much did it lose? 99.84%.
We're down 99.84%.
It's the best product in the history of mankind. I love it. It's fantastic.
I had been just randomly throwing 99.7 out there because it was my favorite radio station growing up. But I was pretty close, 99.84%.
I love it. That's a question that's kind of floated around the back of my brain for a while. Where exactly would VXX be? I didn't plan to solve it today on the program, but I'm very glad that we did.
And with that, I actually have to run into the classroom. I had given you a heads up ahead of time that unfortunately
I know you have to go. Let me jump us really quickly into Crystal Ball. You can get your guests for next week, then you can hop off. How about that?
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. The educational machine that is the Options Institute never stops rolling. Mr. Rhodes being pulled out of the corner office back into a class. But before he goes, let's have him embarrass himself yet again. Let's roll the rest of us here on our Crystal Ball segment where we attempt to divine what the Vol Gods hold in store. Last week, it was me and a guest, Bill Luby of VIX and More, and the ghosts of Mark and and Russell, all guessing. And I was trying to give up my ever upside bets of late, so it was slightly elevated vols. I was kind of going a little bit south. I said 11.5. As of right now, I'm about less than 3/4 of a handle off. Bill Luby saying 12.71, so he's about half a handle off. So he takes the nugget this week closer. He went over though. So Price is Right rules, I win. Net movement rules, he wins. The ghosts of Mark and Andrew and Russell were shameful. 9.5 for Mark and Andrew and 17.35 for Russell. So not good bets at all. That said, where do we stand, Russell? Since he has to go, he gets pride of place, even though you lost horribly last week, sir. What is your wager, sir?
9.5. No, it's not my wager. I'm still shocked with that the option pit team together. The brain trust of the option pit team together came up with 9.5.
I think they thought I know
it was assigned to them. And who the heck am I to say anything? Since apparently I was, and I love the exactness. 17.35.
Yes, your ghost is quite precise when you're not here.
I'm gonna say 13 and a nickel. I think a little bit above 13. I think people are going to start. Maybe looking ahead to the fall, and the September options will start. We will just start to get where options that expire in September will start feeding into the VIX calculation. So I think we're going to ease up or start working our way up from where we are right now.
You're feeling this August vol increase, aren't you?
Yep.
All right, sir. With that said, you hop off. But
people are going to think back.
Before you go, give us a quick plug for what's coming down the pike in the land of all things CBOE and CBOE Live Ball.
Oh, thanks for reminding me. We are doing a one-day focus class, focus on volatility trading on August 19th, CBOE.com/focus to find out more information about that. Mark Sebastian doesn't know it yet, but he's going to teach a section. He owes me, and I need some help. So...
Well
Somebody
done,
let
sir.
him know that.
All right, go enjoy. Go back to the realm of academia and away from all the fun of radio. As Andrew and I will move on. Andrew will attempt to recover himself, reclaim his reputation from that horrible pick last week, Andrew, of 9.5. Granted, you can share some of the blame. It was the ghost of both you and Mark S. making that pick together. So maybe you're in for half of that. You're in for about a 4.75 or so. That said, how do you redeem yourself this week, sir? What are you feeling?
I love the fact that the ghosts of Mark and Andrew picked the below all-time print.
Yes, you weren't feeling it last week. You weren't feeling the vol.
We were totally That's what we get for missing the show. However, I am going to say for next week, we are trading 12 because you know what we're going to have? We're going to have another non-farm payroll number. It's going to be whatever. And I will say we are within 10 cents of where we are now as far as VIX goes. So where are we? 12.26 right now. I'm looking at it as I pull it up. Let me see here. 12. Yes, I will say 12. I'm going to say 12.40 next week, but I think we hit the 11 handle before then. At least we touch it. We dip it. 12.40 next week.
With 11 handle dip. I'll put that little asterisk next to yours. Maybe you get bonus points for hitting that, or perhaps bonus shame. Either way, you have to redeem yourself from that 9.5 pick. I don't know what you guys were thinking last week, but far from me to contradict your ghosts here on the program who were ably making picks. Yeah, I was pretty close this past week, but I'm gonna stay in that same range, but I'm gonna bring myself up a wee bit. Because I'm kind of in the lines of you. I don't see us really eroding a ton, but at this time next week with non-farms, you're right. We could vacillate all over the place. This, of course, the game of where are we this time next week exactly, not where are we next Wednesday or next Tuesday. It always adds an extra wrinkle. It's a very specific game we play here on the show. I'm going to say a little bit north of where I was last week, which was still pretty close. I'm going to say 11.75. So rounding out, we got Russell 13.05, Andrew 12.4. I'm going to put here, with a dip to the 11 handle. And then me right around 11.75, giving up the ghost a little bit. We shall see who is the winner next week. And Russell had to go, but of course, Mr. Rock Lobster, you and I, we got a few minutes left. Let's bring the listeners on now. Time to open up the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody. Like the man said, this is the portion of the show where you guys get to hit us up via all of the platforms he mentioned before, as well as, of course, you guys joining us live via Mixlr, MIXLR, can fire off your questions via the chat there as well. Some people like to also stream via Mixlr, hit us up via Twitter or whatever. We like to do that too. Some people hitting us up to be guests on the show while we're doing the show live here. But don't have time to book guests right now on the show, unfortunately. We'll look into those later. Appreciate all your live inputs here. Let's move on. Here's a good one. Andrew, this came in a couple days ago here to the website. This comes from DK. DK from DC, actually. So he wants to clarify that he's from DC. And he writes, what is the difference between the front month VIX future and the VIX Cash? This is a good question. You know, I could see there being a lot of confusion about this. You know, we talk a lot about VIX Cash here on the program. We predict it in our crystal ball. The media, you know, blathers on about it endlessly nonstop as if it was the only volatility gauge of note. We, of course, talk about a lot of others here on the program as well, VXX, VIX futures, a lot of other things that go into that calculation, where the S&P is, et cetera. A lot of context around that volatility number. But that said, I could see a lot of newcomers to the space, Rock Lobster, being confused. I mean, they see VIX Cash is quoted everywhere. I mean, still to this day, not the number one anymore, but it's up there. One of the more frequent questions we get on the site is still, hey, how come my VIX calls are off? And usually it's 99% of the time is because you're looking at the VIX Cash versus the front month VIX future, so we have to kind of bring them in line for that sense. So there still is a fair amount of confusion. You know, the short kind of snarky answer to this answer is like a point and a half usually, but there's a lot more nuance to it. So Mr. Rock Lobster, why don't you walk them through this? I'm sure this is part of your intro to volatility course. Explain to our friend DK from DC here what the difference is between VIX Cash and the front month VIX future.
Well, there's a couple of things that you have to understand. One is, what is pricing what? So the first thing is the VIX future is an estimation the front month of where VIX Cash will settle to on expiration. That's the first part. So when you look at the VIX Cash, you're like, okay, the VIX Cash right now is 1221, okay? And that's a lovely number, okay? The problem, though, is none of the options are trading anywhere close to that being the underlying, because the liquidity providers price the options off the future price. Okay, so that's the first thing you have to know. So right now, if you have the August 3 expiration, right, those at August 3 weekly future is trading 1290. So again, the market is thinking, right, that we're going to have a markup in price after the weekend. VIX Cash probably marks up to about 1280 or so. And then your 1290 future looks accurate. So what you have to look at is, where is that future trading and where are the options trading? So as far as putting positions together, what we do in our classes is trying to get people to understand, where is VIX now? Where are the futures? Because every term in VIX trades on their own future. So the August ordinary future, which we'll call the serial future, that expires on the 17th, right? That product and the SEP product are what the vol or a lot of the vol products trade from. They use basically the most active future to generate the value for those products, and that's the underlying asset. So when you look at it, you have to decide, okay, here's where the cash is, but the future is telling you where the market thinks that the cash is going to go in the future. So what you have to figure out is, all right, where are we? Where does the market think we go? And then you generate a trade based on that. You just can't say, okay, VIX right now is 1218. I'm going to buy an option, right, thinking it's going to go to 13, because let's say next week's futures are already trading 1290. So you actually you need to move above and beyond where you think the underlying is going to go, right? Because it's possible for the VIX Cash to move up in the future only to move about 10 cents. So again, it's the nuance of the product that works like that. The vol products themselves are more tightly tied to how the future is going to trade. So if both futures move up, VXX should pick up a bit and UVXY should pick up a bit, as long as it's moving more than the theoretical decay of the product, you'll get some movement. So it's one of those where, and if it sounds confusing, it actually is not if you kind of write it all down and sort of see how things are, but that's the way the product trades. So you can't trade it with an expectation of just trading the VIX Cash. You actually have to understand where the future is priced and understand that those future prices are an expectation of where the cash is going to go. And then from there, you price a position in VIX. Hopefully that answers the question.
Well done, sir. I was just following along with the live debate here. Russell, before he left, fired off a parting shot. He tweeted out his answer for the erosion of VXX, and a lot of people were commenting and tweeting. It's been fun to see the live back and forth there on Twitter and others. People shocked by that, people surprised by that, people think it's nothing. All sorts of fun stuff. Let's move on, see if we can get a couple more here, at least one more here on the show. This one comes from Big Jim Wheeloff. He apparently is not too happy, Mr. Rock Lobster. He says, "Why are options I'll make the family-friendly version so darn expensive? At this rate, I'll go broke hedging my 401k." Well, I'll have to look and see when this came in. I don't know why he's that angry. As we've talked a lot about on this program of late, we're kind of on the lower end of the recent volatility range in terms of VIX and products like that. So in general, volatility is low, which is typically a good thing for premium buyers. That said, he is hedging his 401k, and that, of course, gets into the volatility skew of the S&P 500. Let's pull up the SPX right now to get, the skew index to see exactly where we are printing at this moment. We're at about a 128. So again, that is mildly It's actually more on the normal range, quite frankly. It's nowhere near the recent highs we've seen of about 155. Again, a higher number out there indicating a heftier bid to the puts. Again, I'm always hesitant just to throw out a blanket skew number because we know there's two moving parts to that. There's the put wing and the call wing. In fact, if you'd like to break that down, I encourage you to listen to our TWIFO show later today, This Week in Futures Options, streams live at 3 o'clock Central, 4 p.m. Eastern, where we actually are able to break down there some pretty cool stuff whereby looking at the skew of the put wing and the call wing moving independently. It's pretty cool stuff. A lot of times in the S&P, it isn't as granular when we look at just one number. So there's a lot of interesting things, but still, puts are always have that bid anyway. That's why skew is quoted with the puts over. In investment skew, puts have that premium from a vol notion. I think at the most recent risk management conference with the CBOE, I think they quoted the typical cost of just buying, I think it was a 2 or 3 month put out there, a couple percent, like 3 to 5% out of the money S&P. It should be somewhere around 9% or so a year that you're going to shell out for doing that. So that's a hefty premium. So if that's a lot, and that's even in a low volatility environment, then, and it certainly is, then a lot of the strategies we talked about here on the show to mitigate some of that outlay are certainly more up your alley. But yeah, net right now, complaining about expensive options in this environment, there are certainly times when it could be a lot more. That said, Mr. Rocklobster, I'm sure you probably hear this a lot from some of your newcomers coming into the pit chat there and coming into your mentoring classes, and they're like, "Oh, these options, they're too expensive." I know you're kind of on that tip as well. You tend not to buy things unless you can buy them for free. I often said the name of your book will be How to Get Your Juice for Free. So what do you have to say here for our friend, Mr. Big Jim, who's not happy?
And you're amazed when people come into our Option Pit chat room. While it is not what I would call a beginner chat room, they are amazed that you actually can generate trades like that. Like, how do you do that? I go, well, here you go. You do it like this. Like, oh my God. So it is possible with a little bit of knowledge and practice to look for trades that that exhibit quite remarkable risk-reward profiles. But all I do is talk about myself, and that's really not the question. So I'll give you a simple rule of thumb. If you're going to hedge a long, let's say you have a delta position that's long in something because you like the stock, you like the whatever, right? And insurance is expensive. So that what I try to tell people is if you're trying to insure a position, and the insurance costs more than the position, meaning you're not going to make any money after you pay for the insurance, then you probably should examine why you're in the position in the first place. Meaning, if you're buying puts in the SPY, it's almost impossible to buy enough puts. What you're doing is you're buying puts that allows you to sell those at some later date and take that money and go buy more SPY. That's how I always think of that kind of portfolio insurance. The only way you're actually going to make incremental extra dollars is if that position is ratioed somehow, if you're buying more puts or something like that. So you have to just think, what are you doing with what you're buying? What kind of insurance are you trying to buy? And you have to have a reasonable expectation. Just hedging a straight equity is very expensive. And you would do that if you think the upside is worth much more. And granted, maybe you underperform the market a little bit if we go straight up. But there's nothing you can do about that. However, the times when the market is totally falling apart, if you bought puts wisely or any kind of protection wisely, you take those dollars, right? You harvest those dollars, and then you turn them into more long, and then you turn them into more long. So it actually allows you to buy more stuff at lower prices. When the market starts to go back up again, you will now be outperforming, and then you can go do the whole thing all over again. So again, it's how you actually trade and manage the type of position and what your expectation is. Yeah, I think anyway, that will help you anyway from why are those options so darn expensive problem.
There you go. Hopefully that will bring peace to Mr. Big Jim, who's having a rough time of it. Unfortunately, that music means it's time to come to a close this episode of Volatility Views. What a sojourn we had today, Mr. Rock Lobster, talking about all things VIX and trading, analysis, VIX futures, VIX options, weekly VIX options, into some earnings. A throwaway conversation about VXX becomes a very lengthy discussion of where that product would have gone away. All sorts of fun stuff today, as well as some of your questions and some of our hilarious predictions for the future. Wrap it all up in a nice tidy bow, and that's what you get here on Volatility Views. Mr. Rhodes had to hop off, of course, to check him out over there at the Institute. Of course, this program brought to you by our friends over there at CBOE Live Vol. If you haven't checked them out already, goodness sakes, what are you doing? Head on over to livevol.com. You can check it out there. You can get the free trial. It's free. You can see all the analysis, all the tools we use here on this program. We talk about a lot of the skew and all the other numbers and the ADV and everything else we're talking about here. Historical vol, implied vol, pull all that from Live Vol. Check it out yourself. Free trial over there at livevol.com if you are indeed so inclined. And before, of course, they have the data shop as well. So if you're looking to harvest some data for a specific time frame and a specific product, they can do it for you, customized all right quick. And Mr. Rock Lasser, before we go, what's popping off in the land of the pit?
We're going to have two things. One is we have our commodity option trading Saturday course tomorrow. Starts 9:30 Eastern time. For all Option Pit subscribers, it is free. For all new subscribers, it's going to cost you money. We will also be, funny enough, announcing a volatility course, which I would say is, let's say it will start at the beginning phase, but by the end of it will be advanced. That will be a new Option Pit offering. We will be announcing when that starts very soon, and then Mark will be doing a VIX primer course for September. So stay tuned, everybody.
All right, everybody, stay tuned indeed. Unfortunately, you can't stay tuned here anymore because we're done. But we'll see you next week for more Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.